Hello everyone, welcome to the presentation on corporate finance. My name is Raju Gurung and I'm currently a student at Holmes Institute. In this presentation, there will be two sections. Part A, personal attributes required to become a corporate accountant, along with their key roles, tasks, and responsibilities. And in part B, we will review and discuss different ways and different equity, liabilities, comprehensive income items reported in companies and corporate groups. And in this particular case, I've chosen West Farmers as the corporate body on which we will review. Now let's get into part A. I'll briefly go through the personal attributes required from a corporate accountant. As per the job vacancy advertised in various platforms in the internet, I found quite a lot of attributes, but to sum up, these are some of the very important attributes that's required from an accountant. Number one, effective analytical skills. For an accountant to be at his topmost level, you'll have to have analytical skills to actually analyze the transactions, the reports, the financial statements, and all. Similarly, effective communication skill is also very important, so that you effectively communicate with your team members, you communicate to your bosses, to your juniors, and all. And a good time management skill is also important to complete your job on time. Effective relationship management skills. This is very important in a corporate sector because you would be working with a variety of people, variety of staffs. So relationship management skill is very important. Most importantly, accounting, you will have to be proficient in accounting softwares, in like accounting packages, Mayo, and all. And of course, very important, Microsoft Excel and Word are the basic minimum requirement of in today's world for any kind of job. And from the advertisements gathered, I found following common key roles and task responsibilities of a corporate accountant. One, preparation of budget and forecasting results, preparation of financial statements, treasury and audit at the year end. Similarly, preparation of corporate board reports, budget and variance report, and preparing, reviewing components of statutory reporting, and also along this line, an accountant would have to ensure such statutory reporting requirements are as per the standards required, and sometimes, and not sometimes, in most of the cases, you'll have to assist junior members of the finance team. Now, how key roles and tax responsibilities are related to corporate accounting. Having reviewed the job advertisements and done a bit of research, and also have covered the unit until now, this unit, corporate finance until now. I find that many of the units are covered, and some of the major ones are review and preparation of financial statements, which was covered in this current unit, and cash flow management, which is also covered, preparation, review, and reconciliation of journal entries. This was also covered. Now, coming to missing or additional topics, almost all the components are covered. However, going through the job advertisement, treasury duties and audit at year end, and taxation topics are not covered in this unit. Maybe Holmes Institute could look into this. Now, to be a top-notch corporate accountant, you'll have to have analytical skills, because that's the requirement. Should manage time effectively, ability to operate different accounting softwares along with advanced Excel, and most importantly, sound knowledge on accounting principle is very, very important. Now, going to part B, I have chosen West Farmers as the corporate company to review the financial statements. West Farmer was established in 1914 as a farmers cooperative, and now from 1914 until now, the cooperative has come a long way. It is one of the largest company in Australia right now, and it employs. It is one of the largest employers as well, in Australia. Famous of popular brands like Kmart, Officework, Bunnings, and all Coles are all owned by West Farmers. Now we'll go into discussion on each item of equity reported. Issued capital. Issued capital is the shares that the company has sold to shareholders against cash or some other consideration. As per the consolidated balance sheet, issued capital increased from 15,809 million in 2019 to 15,818 in 2020. The reason for this is in the value. The reason for increase in this value is because of the transfer of 9 million from other reserves. Similarly, there has been the reserve share of West Farmer has increased from 89 million in 2020 to 89 million, increased to 89 million in 2020 from 81 million in 2019. This is simply because of the acquisition of shares on market of 8 million from KEEPP. Retained earning, the net amount left over for business after dividend payment is called retained earning. West Farmer have retained earning increased to 445 in 2020, while it was 208 in 2019. And the reason for it is less dividend payout. Discussion on other liabilities reported. The money owed to the trade and other payables is the money owed to the suppliers and vendors for inventories as per the balance sheet. As per the balance sheet, it has increased to 4,008 million in 2020 from 3,620 in 2019. Similarly, interest-bearing loans and borrowings, these are current and non-current liabilities for which interest needs to be paid. Total interest-bearing loans and borrowings have decreased to 2,056 million in 2020 from 3,029 million in 2019 because of large repayment made by West Farmers in. Lease liabilities are the lease payment obligations of the company. While there was no lease liabilities in 2019, there was about 6,223 million non-current lease liabilities in 2020 and about 1,000 million in 2020. Now, items reported in other comprehensive statement. Items which may be reclassified as to profit or loss are, and these are, I'm sorry, some of the items are included in other comprehensive statement, and there are two categories. One is items which may be reclassified to profit or loss, such as foreign currency translation, reserves for cash flow hedge, transfer of realized losses. And the second category is items which may be classified to profit and loss, which and the examples are reserves on financial assets, retained earnings, which include remuneration, loss on defined benefits. The reasons for not recording in the income statement, the reasons for these items not being reflected in income statement is that the company has that these items are not realized when the statement is made. Now, the comparative analysis of items on comprehensive income statement. Profit attributable to members decreased from 5,510 in 2019 to profit attributable to the members decreased from 5,100 to 5,510 million in 2019 to 1,667 in 2020. The exchange difference on translation of foreign operation has decreased to 4 million from 14 million. Unrealized gain on cash flow hedge has decreased as well. Realized gain transferred to non-financial assets have increased to 259 million from 204. Similarly, tax effects has increased to 37 million from 24 million, and net of tax from 38 million to 70 million. Should the comprehensive income be included to evaluate management's performance? Why? Since the comprehensive income is seen as an inclusive assessment of earnings and overall profitability, because it gives you the detailed information, and this enhances the transparency and reliability of financial reporting, and also it provides insights into essential items in financial reporting and enables assessing for foreign operation performance. Therefore, this comprehensive income should be used to evaluate managers' performance. That's my view. Thank you.